Unfiltered opinions.
Introduce me.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
I'm Nicolette Mashile.
And I'm Simon Brown.
Welcome to Insider Exchange.
We begin with Market Matters, and this week's edition of Market Matters is brought to you by our friends at Finalto. We thank them for not yet getting us new mugs, but for getting us very nice jackets. And we're joined...
Half a jacket.
And we're actually joined in studio by an analyst from the Finalto team, Ruan Landsberg. Ruan, thanks so much for coming through. Thanks for joining us. We're going to be taking a look at a couple of things. We're going to be looking at US CPI data. Obviously, that's been the big talking point this week. PGMs as well. There's been some announcements from China. They always move the markets, and we cannot ignore Pick n Pay. I suppose let's start with Pick n Pay, Si.
Shall we start with Sean Summers? I mean, forget Pick n Pay. I mean, we'll come to Pick n Pay. So as I understand Sean Summers, I mean, there's the rights issue. This is not unimportant. But late on Thursday, after market close, a little deal where basically Sean Summers gets 2 million shares for implementing effective leadership.
Yes.
Changes.
Yes.
Okay. So he fires some folks. Okay. Then that only happens October next year. Then in Feb 27, he gets another 1 million for CEO succession. In other words, I'm paying someone to go and find a CEO.
Yes.
Yeah. And then 1 million, which he might actually have to work for, financial performance targets. All in all, what's that, 108 million at closing price. Yeah. Nice work if you can get it. Particularly the 54 million for implementation of effective leadership and operational structures. I suppose if you want Sean Summers back, you got to pay him.
That's my thing, guys. I built the business for you. I left the business in good hands and in a good place when I left. And for you, you made a mess of it. You want me to come back. I set the KPIs. The fact that they agreed to the KPIs shows you that the Pick n Pay board had very little negotiating power.
They had no negotiating power
at
all.
I mean, for you to say, here's a 50 million rand incentive.
It's a signing bonus, I suppose.
It's a signing bonus.
Look, rather a sign-on bonus than we fire you and he has money, which is what they did with Peter Boone.
But also, if I'm Sean Summers, I don't want my bonus tied to your performance. I have a lot of cleaning up to do. I want my bonus to be reflective of just, I'm old. I've done my part.
Yeah.
I want an easy life.
He was earning pounds. I mean, now
That's
he's got to
it. You've
earn
asked me to come back to South Africa. You've asked a lot
in
of me.
the middle of winter.
That's it.
Yeah.
You've asked a lot of me. So accept that in that situation, I determine the KPI. Yeah. This is the ultimate KPI flex.
No, I take your point. I mean, it is. It is absolutely the ultimate KPI flex. And hats off to Sean Summers because Robin Summers. I didn't know the Robin part, but anyway. And you know what? What the heck? Yeah. They'd take them for everything they got.
That's it.
Yeah, which is about 108 million.
Well, hopefully it gets better. Hopefully the business gets better, and the rights offer obviously went through part 1 of 2. We'll still have that Boxer unlisting that will take place. That'll do part 2 of 2 to raise the 4 billion. I don't know. I mean, at the moment, I suppose there's very little we can do about Pick n Pay. The share price is reacting positively to the fact that something is happening. And I guess Sean's just there for the money.
Yeah, look, and they got saved, right? The take-up price on the rights issue is 15.86. A couple of months ago, the share price on Pick n Pay was about 15.86, which meant they could do a rights issue at that price rather than $8. As it is, dilution is 250 odd million into 493 million existing. So yeah, it could have been a lot worse at that point in time. But the interesting thing is, so they get 4 billion from this. What are they going to get from Boxer? 6-8 billion, I think is the plan there. 10 or 12 billion.
Pay off some debt. Hopefully.
It's about their debt. It's also about their market cap, which is currently 13. Which is up from when ShopRite could buy them from cash
for
on
9
hand.
billion, yes. But if you do this, if this happens and it goes through and everything, you've got the opportunity to basically reset.
Yeah.
And I suppose as Pick n Pay, as the board, if the cost of a reset is to pay Sean Summers 100 million, 108 million, then it's either that or you lose a 12 billion rand market cap company, and so this is a better deal.
Well, and yes, and it's more than just that. I mean, look, it would have been business rescue, and my chart isn't zooming out as far as I needed to. But I mean, we're back at share prices, which were about when Sean Summers was last there. We're back at 2006 levels. It also traded there in 2008 during the global financial crisis. This is a stock that had been $85 at one point. So, I mean, the short answer is, and in fact, at its recent lows, it was back at 2004 levels. I mean, this has been a disaster.
Yeah, we did 20 years. We wiped out effectively the last 20 years of price movement with these lows and with everything that had happened. I'm looking at it now. I'm looking at a chart. We got as low as 16 Rand 50 at one stage, which was absolutely nuts. February 2014 was that spike down, obviously. But before that, you're right, 2004 pricing. Actually, no, it might have been even before. Yeah, 2004 pricing is where we were. And as you said, 80 Rand, long way away from that. But I see people loading up.
I see people loading. I absolutely. You know, so rights issue opens Wednesday. I think it's LDT Wednesday, or was it Tuesday next week?
Not sure. I'll check the date.
Yeah. So, and then it goes through to the end of the month. I'm interested in this. I had a position, and then the announcement of the disaster was way worse. I thought at worst was a 2 to 4 million capital raise. I didn't see billion. I didn't see 10 billion coming, and I took my money and ran. Small loss, but always the best loss. And then I ran. And it's looking interesting. I think Sean can do it. I you know, if anyone can. And the point is that Pick n Pay is fundamentally broken, but at the core of it, it's also fundamentally a grocer. They've got distribution centers in place. They've got
infrastructure. They've got
all of that.
They're not starting from zero. You're not building a new grocer.
This isn't Choppies.
Yes. Which
we were not supposed to laugh. But here's my funnest fact about Sean Summers. What I'd always remembered him for was back in August of 2006 when he got caught doing 186 Ks on the N3 in his Ferrari.
Sean's lived. Sean's
Sean
lived a
has
full
lived
life.
The good life.
Yeah, and now he's getting a good retirement.
He's lived a full life.
Kudos to the man.
Speaking of full lives, there's been a lot of stuff happening internationally as well. US CPI data, that's been... Well,
That's crazy.
I say US CPI data, but I suppose at this point, President Joe Biden's taking a podium at any point is more interesting than the CPI data.
Yeah, 100%. I think, he went on yesterday as well, and they asked him, are you stepping down now? And I mean, even there, he said Vice President Trump.
Yeah, I was going to say, was that before after he called Zelensky Putin? Which is what he did.
It's crazy. And the thing is, it's getting to a point where it's messing up the US, because I mean, at the moment, from my perspective, I mean, there's no better president. But
so you say crazy, but I think what we're forgetting is it really is crazy. The moment Donald J. Trump is a better candidate than your sitting or your incumbent president, you know you've got
who's done well in the last 3.5 years.
You know what? But still, when you're polling and you're doing these debates and all of that, and people are saying recall Biden, because that's effectively what it is. In South Africa, that would be the ANC recalling you.
Of the Constitution, you can essentially recall it.
That's it. It's not replacing a candidate. It's not the Democrats saying, oh, we're changing things. It's a recall that we're window dressing, however. But let's not digress from the CPI data. The data suggests that we're in for rate cuts sooner rather than later.
Yeah.
As early as September, I suppose.
Yeah, September, that's what they're looking at the moment, yeah.
That's a good thing. What does that mean for the Rand, though?
Yeah, well, for the Rand, I mean, I think just the CPI data alone, I mean, the Rand is obviously gaining strength. And I think with the CPI getting the rate cut, that should bring the Rand down to like 17 in that range. And I mean, we haven't been to 17s in a long time.
I like this man. We must have him back more often.
So it's good for us. I mean, at the moment, we've been floating around in the highs for the longest of time. I mean, we haven't seen low data this year to say.
Yeah, we're below
least.
17. We're below 18 now. Sorry to interrupt you, Ron. We're at 17.95 at the moment, which we've been flirting with that 17.95 kind of range for a while now.
Yeah, it's been a year exactly since we've been there. So it's
now
really good.
We're finally seeing that. If I look at a chart, if I look at a Rand chart, this thing at the start of the month, we're only 12 days into the month, granted, but we were as high as 1866, and it now looks firmly like we're heading towards 17. You look at this.
Yeah. We're getting dollar weakness. Dollar index. So I mean, and the dollar index, the DXY, has got some lower highs. It's toying with the low. But to your point as well, it's just consumers have had money out of their pocket. And corporates, except for those with cash, which is not most. And it's now, it's just putting money back in. So, yeah, I mean, I think it's good for ZAR. I think it's good for everything. It means we can cut too.
Yeah.
Are we going to cut first? That's the question.
So there was what's Nolan Vippenaar from Anchors saying that this week quoted as saying that the MPC, wants loves high interest rates, wants inflation at 3% and blah, 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 and wouldn't cut if they had to. I mean, our CPI print was 5.2. The target is 4.5. And the MPC's target is that we will get there like next year, sometime.
2025,
Yeah. So short answer is, I don't know why they aren't cutting. And can they cut first? You know what? You don't want that big a differential because money will flow, but it's not going to flow because like the ECB's already started. We know the US is coming. And why not? Why not a little July cut?
We started the hikes first. Why not start the cuts first?
Yeah.
We did. We started the
exactly.
interest rate hikes.
And a little 25
Crazy.
points in July. Come on.
Yeah, come on. PGMs. I don't know if you saw the announcement. I saw an announcement that China's launching futures on platinum and palladium to boost their own local market. And Ruan, I'm hoping we can take a look at the platinum pricing and all of that, because that's also been range bound, much like the rand and the gold price and all of that. A lot of it has been dependent on things like demand, and China's been struggling to figure out how they stimulate their economy. And I think this is something that they are now seeing is the result of their own bad decisions in the past, where they wanted to meddle in the economy in the first place. They shouldn't have meddled, and now they're paying
China,
the price. But that's China, right? What am I
China
saying?
meddles. I mean, come on. There's actually a big conference happening in the next couple of weeks. The fun thing with China is just go read the paper from the leaders, because they tell you what will happen in the next 5 years, and it happens.
And they do it.
Because
they stick to it.
Like if you get in the way, you're gone.
They do it.
Yeah.
Oh, it's quite a crazy time. But I mean, commodities in general. So we'll start with platinum, and if we get time, we'll go through palladium and everything. But I want to look specifically at the platinum space, because for us, it's PGM miners, the Sibanyes, the Northern Platinums. All of those guys are adversely affected by pricing not doing its thing. And pricing really hasn't done its thing. It's stuck between a range of 800 and 1,100. It's been going sideways for 2 years.
Yeah, and I mean, even if you just look at the price action, I mean, it's forming lower highs on the weekly. On the daily, it's forming a range as well, which is obviously, it's called a bearish flag. So once again, straight to the top side, but obviously pulling in buyers to go short. So, I mean, if we continue like this, as we are doing now, and the day will close like this, I do see it going back to 902. So I do see new lows being created on the daily as well, back to 902.
Okay, not so sure I do like it.
There we go. You're still on probation. So then if that's the case, then Rowan, at what point does it break out of a channel? Because if we've been consolidating for as long as we have, technicals suggest that the longer the consolidation, the sharper the breakout, and the more impactful it will be, right?
Exactly.
We had this whole craze around, we're going into EVs, therefore platinum's not a thing anymore. And now you've seen companies roll back, all vehicle manufacturers saying, actually, we're not going to make all electric. We might make hybrid cars or this or that. And platinum seems to be coming back into favor. At least China says we're going to start doing futures on it. So they clearly don't intend to give it up.
Yeah.
What does that mean for the next, I mean, if we do an outlook, say, to the next 12 to 24 months, is this a good time to be getting in this consolidation?
Let me just quickly run through everything here at the moment.
Yeah.
Oh, look, once again, if you look at the higher time frames, I mean, we've been trading to the downside now for the past few weeks as well. And I mean, there's been no significant indication for price to have bullish momentum to the top side. So for the past 2 months, 3 months almost, we had no indication of shifting momentum back to the top side. So I still do believe there's downside potential for us to go down and tap into that lower areas closer to the 902 area before we'll see some bullish momentum.
Okay, I'm tired of words like downside and bearish. No. Let's look at gold.
But there's a geopolitical story here as well, because these platinum contracts are going to be in rupees, right? Not US dollars. And let's step further back to the invasion of Ukraine by Russia, where suddenly they've got these reserves
that are frozen.
And they don't have reserves. What we've been seeing is buying of gold, because you can literally put that in a vault under your Kremlin or whatever you might have.
Which India has been getting gold back from the UK and its other depositories.
Turkey, Philippines, all of these countries.
Basically everyone that isn't South Africa.
Yeah, actually, yes. But suddenly it's a case of like, whoa, hang on a second. And this comes to the whole, I've been around long enough to hear a lot of the end of the dollar story. And at some point it will be the end of the dollar, although I don't know when. I mean, probably not in my lifetime. But this is again just that trying to break that stranglehold, because suddenly wars are economic and Putin lost however many hundreds of billions of reserves, which were just like, sorry, gent, can't touch it.
Do you know what I think? My 2 cents on this is the catalyst started before the Putin-Ukraine war. The first rock that was thrown at this, or the first crack that was made in this dollar shield, was China taking on the US in a trade war in 2020 in the middle of a pandemic and not losing.
Yeah.
Because the outcome, that no country has ever done that in the history of histories, where you've come into a trade war and said, we will go toe-to-toe with the United States. You impose tariffs, we'll impose tariffs, and come out of it to live to tell the tale. And China has. I think that was the first thing. And as you say, we might not get it in our lifetime, but what we will get in our lifetime is a certainty at this point. I'm going to put money on it that gold will hit $2,500. I say that because it's only $100 away.
And quick point on the China. Yeah. So this morning, 5 o'clock, and I'm awake at that time, so it's weird. Balance of trade, $99 billion in favor of China.
See.
Did win that one. Gold.
See.
No, for gold, I mean, gold has been bullish the longest of time. I keep telling everyone's like, yeah, it's going to short. But at the end of the day, obviously, with everything happening in the US, obviously the guys are pushing their money towards gold, the safe haven that can obviously keep going to the top side. So long term at the moment, I mean, we're also in a ranging market on the weekly. We've been in a ranging market since May, but I don't see gold slowing down at the moment. I do see somewhat of a pullback, but I'd also do see gold pushing into 2,526 going forward.
Interesting fact, I'm looking at a chart. 4 years, gold, return, 100%. It was at 1,200 in 2018. It is now at 2,400.
Which is 6 years.
It was 6 years, sorry. Mathematics. Oh,
and that's
when
why
you live through a pandemic, you lose count of the years that
Jimmy
you go
Matthews
through.
hard more. But it is, and it's in that range, to your point. I mean, at the beginning of the year, one of my predictions was gold 2,500. We got close, but there's no reason why we won't.
Yeah, I mean, there's no reason.
This little consolidation you're talking about, it's been going on for a while. That is bullish.
Yeah, that's a bullish momentum, yeah.
But if you look at the consolidation, either way, if you look at just the performance of the gold price, right? 1,200 went up, 1,600 became your new support level. Then we go up to $2,000. Now $2,000 is going to be a firm support level. And then from there, possibly 2,400. But to get 2,400 as a support level, you have to punch up to 2,006, right?
Yeah, exactly.
So there's still further upside on this. It's literally a chart from, as Simon would say, from bottom left of the screen to top right of the screen.
Those are my kind of charts.
Yeah, that's what we like to see.
That's it. Easiest chart. And it's at this point, it's pointless trying to call where it's going to turn from, right? Don't try call where to short from. Just let it do its thing.
Yeah, but short gold.
That's what people always do. Like, people always ask me, like, when's it going to turn around? And I'm like, if you've been stuck in this bias of 24 months of just when it's going to turn around, quickly trying to find the highs. But if you just stick to the bullish momentum, I mean, you'll be way up. You don't even have to figure out. Just wake up daily, you understand where it's going in the long term, and figure out on the short term how to execute on that.
The man's young. I spent 20 years. The only time I bought a gold share was when I closed a short. Ooh. And they were profitable, except one. I don't know if you guys remember the fake takeover for Goldfields or Harmony, or anyway, it was all fake. It was the Reuters got hacked or something. This is 20 years ago.
This was before our time.
Yeah, it was 20 years ago. But forever and a day, the easy money in gold shares was when they popped, short them, and then take the money. It was like candy from a kid. That has changed.
Yeah.
That is a
Completely.
fundamental.
Do not try and run against a market like this.
Yeah. But fun fact, so gold's up 10x since Gordon Brown was selling the Exchequer gold back 20 years ago. The gold miners not. Harmony's at its 2004 levels.
That's it.
I mean, it's weird. Gold you can hold.
Yes.
Gold miners
You can't.
You can't.
You can't,
Yeah.
That's so crazy.
Yeah.
That's nuts.
Gold is nuts, Jim. Come on, think about
No,
it.
gold itself, I think just everything at the moment, it's backing it. I mean, even with the economy of the US, everything is at the moment backing gold to keep going up. And I mean, it's getting to a point where it's becoming dangerous. I mean, especially for hedge funds in the US, because I mean, these guys are all sitting in long positions. So I mean, the liquidity at the moment is panicking because these orders are not, I mean, someone needs to sustain that orders that keeps going up, and the guys are just entering long positions every single day.
Yeah.
I think we're sitting on the most long positions on gold ever in history.
But this is another testament to what happened when gold came down to 1650. It took, I mean, that 1650 level hadn't been retested in years. And because there was liquidity stuck there at some point during the pandemic, I think it was 2022, we came down to that 1650 level and we swept all of that liquidity. But now that liquidity had been there for how many years?
Yeah.
So it's definitely, it's one of the most interesting things. I like that it's one of the most stable kind of, it's predictable at this point. Unlike things like platinum where we see the channel, but nothing's really giving it a move, you know?
So here's the fun fact on gold. According to CBS, Costco sells up to $200 million a month in gold.
$200 million.
Costco.
And they bought out, so they do the American Eagle coin or something. They bought out, I think, 100-gram bar, and they sold it out in hours. Costco, where you go and buy toilet paper and bulk.
Costco. I've got nothing. I've got no response for that. That is, wow. Talk about diversity, right?
Yeah.
I think about the Starbucks model and their prepayment of coffee and all of that.
Don't
Anyway,
give Starbucks ideas.
don't give Starbucks ideas. We'll invest your money in gold. No, hopefully you guys don't get that idea. That's all we have time for, though. We're definitely going to enjoy having these conversations going forward. And officially welcome Finalto as one of our sponsors, one of our clients, one of our partners. But thanks so much, Ruan. Thanks again for coming through. That's Ruan Landsberg of Finalto. And this segment was brought to you by our friends at Finalto.
Right. Well, thanks, guys. I really appreciate it. It's an honor being here. Thanks, guys.
We move on to the deep dive segment. This is obviously a segment where we look into either a sector, we look into a stock, we look into a trend. I thought for this one, let's get a tech expert in because we've been having this raging Mac, Dell debate, Android, Apple nonsense. But I know a really good tech guy, right? Mudiwa, Gavaza, economist, tech guy, tech junkie, everything in between. Thanks for joining us, bro.
Thank you so much, guys.
Cool. Welcome.
Tech stocks, where do we start?
Okay, cool. So I think there's a lot that's, happening in the sector, but one of the things that I wanted to bring to light, a little bit of, my own book here is something that we looked into this week with the Financial Mail, right? It's a simple question to say, there's a lot of noise that your telecoms operators and there's this fight happening between your tech guys and your telecoms operators. And it's simply this. As telecoms operators, we want to be able to charge kind of like a toll fee to the tech guys for use of our infrastructure, which is the network, right? If a network is like a highway, then you as the tech operators help us to maintain this infrastructure that you've benefited from, right? Think what you call this, think WhatsApp, FaceTime, all of those, all of those
Netflix,
platforms.
all of
Netflix, all of
I
those
can only stream
platforms
Netflix because the telco spent a fortune
on the networks, right? So we did a little bit of a piece because obviously right now GNU is happening right now, and we're now saying what are going to be the policy pushes, and this is one of the things that we decided. Okay, this might be something to look at. We've got Shamil from Vodacom, Ralph from MTN, and Serame from Telkom, all the big guys talking about the fact that it would be nice if you guys chipped in to this thing, right? And the reason why it's also big is because globally, last year, 20 of the biggest operators in Europe, including Vodacom's parent, that's Vodafone, they pen a letter to the EU to say, guys, can you guys make these guys pay us for this thing?
It's interesting that you mentioned those big names and you left out George Mendes at Celsea.
Sorry,
And that's because George sold his infrastructure business. And
Yes.
I had that conversation with him. I remember we had dinner at some point and I said, but why do you then sell this? And he says, I don't need the physical infrastructure to be a telecoms provider, right? So I understand where the telcos are coming from, but at the same time, George took a business decision to say, I'm not going to make as much money from this infrastructure business, therefore let me exit the business. Saram is doing exactly the same by selling SwiftNet. So why then do you want to come back and cry, oh, but you guys are benefiting? You as the company, as a Vodacom, invested in that infrastructure.
Yeah.
You did it. You benefited from it. You are the largest infrastructure holder or whatever it is. Why then now should other players then have to pay you for things so that you can recoup that investment because you've earned from it as well?
Because that infrastructure is expensive and never ending.
Yes.
That's fair.
Isn't that one of their problems? That
It's a huge one.
3G was exciting, and then you roll it, and as soon as you finished, like 4G.
5G now.
Now we're busy rolling
Now we're
5G,
on 6G.
and I've already heard, exactly. There's just that never-ending churn of upgrade.
Yeah, and I think the other thing, if we're gonna bring it back to a conversation around investment and that type of thing, is the fact that how you rate a stock depends in large part on what is that business spending its capex on, or what is the structure of capex to opex, what is the cost structure,
and what is the
looking
return
like?
on
What
that
is the
capital
return
deployment?
Exactly.
Yeah.
So if you're a telco in the current environment, as what Simon is saying, and you're spending all of these amounts of money,
And
right?
you're not getting anything
from
back
an
on it.
investor point of view, that is always a piece that you're thinking about. That, if I put my money into this company, I know, hands down, these guys are going to be spending billions every year. If it's not upgrading us from 3G to 4G, in the South African context,
It's connectivity, improving connectivity.
it's diesel.
Yo,
You went there.
burn.
You just had to go there.
But you make
diesel.
a point there. If I'm Shoprite and I'm spending $1 billion a year on capex, I'm getting stores and trucks,
That's
and I'm
it.
getting more income from it.
That's
Yeah.
it.
If I'm Vodacom and I'm spending $1 billion, I mean, I just get faster speed, and maybe I use a little bit more data.
But I can't justify a significant increase to my end user.
My return on investment is that the problem they run into?
That's part of the problem that they run into. But I think the other one is the fact that, especially when you've got operations their size, it's just the infrastructure gap that's at play. And the other place is the fact that your big internet players, as much as we're talking about this, they do recognize that they need to be contributing to the pie, which is why you've seen Meta investing in undersea cables along the east coast of Africa. You've seen Google doing it on the western side of Africa, if I remember correctly. So there's Equiano, there's Two Africa. Those are two cables that the two companies have spent $1 billion on. Amazon
Uncle Johan's not going to be happy about this, guys. Seacom. Uncle Johan's not
exactly,
going to.
right.
Seacom is old.
He's not.
Right.
But when I remember there was a time where you mentioned the undersea cables where we had problems with connectivity. I think it was on the eastern side, and all of the traffic had to be routed to the western side. And Seacom made a killing. It was during the pandemic. It was like a 2-week period. But it illustrates the importance, as you said, of the infrastructure, I suppose, that underpins everything in a globally connected
It
world.
used to only be that Telkom cable. Was it SAT3? Was Telkom
Yeah, one of
cable?
those, yeah.
And that went down, and there was no other cable.
Exactly.
It was a horror show.
Yeah. And I think if we're going to talk about it from a global markets point of view, right, you've got probably one of the biggest internet players who's entered the infrastructure game is Elon Musk with Starlink.
Yeah.
Right. And that's a business that if you're to look back at history, he will likely look to list that business at some point. And it's going to come at a crazy valuation because of, all the stuff that he's done, specifically on that, shooting up all of these satellites into the sky.
He's not. If you look at what he's doing with Starlink, and I like that we get to move into the international space around tech stocks as well. He's not a mad rocket scientist just shooting things into space, because his plan, and even if this is just a rumor around his plan, it's a well thought through plan to have Starlink satellites linking to Teslas, where you've got the data that the Tesla collects being uploaded to the Starlink, effectively creating a connected ecosystem that has only ever been done once in history, and this is the first and last time you'll hear me acknowledge it here, is by Apple, right?
Yeah.
The connectivity and that kind of seamless integration is the model he's putting in place for Starlink and Tesla and the X.com platform. And at the end of the day, when that is complete, it'll be very difficult to rival.
Exactly. And one of the reasons why I brought up, Starlink is because of the point that you just made now around the fact that, he's creating this ecosystem. And it's also because when you look at global tech right now, the thing that's driving global tech right now is AI, right? And if NVIDIA is anything to go by, the hardware behind what you call this, that AI.
The hardware behind the information.
Yeah. Then underneath that, you then look at your cloud providers, your data center guys. There's infrastructure that's sitting.
But below those guys,
underneath all of these things,
cloud guys or the satellite guys, which is where he's gone right to the end.
Right to the end, yeah.
From the satellite point of view, we will then have the satellite that your cloud service can sit on that will allow your security business to sit on or whatever it is.
Yeah.
And that service will then interconnect with a Tesla or with whatever else he decides to come up with. So he doesn't seem like the crazy scientist who's shooting rockets into the moon without a plan.
All of those things. He's just also got a plan. Does the EU accede to this agreement? Because I remember a couple of years ago there was this debate in America. The likes of T-Mobile and the others were like, "Hey, hang on, we want our cut." I mean, does the EU turn back to the telcos and say you've got a good argument here?
Right now, at least from one of the papers that was published in 2022, I believe, by the regulator. That's the nice thing about the EU. You can just go to one body and they will they either give you an opinion or they don't. Whereas in Africa, if you're MTN, you're fighting maybe 18 different regulators. If you're Vodacom, 10 or so, depending. Is that they said, actually, we think that your cost of infrastructure is being covered quite a bit on both the consumer side and also on I think they spoke about the ISP side, to say that, there's that. Then there's it's almost an overlap, a little bit of an overlap with an issue that, caused a lot of furore a couple of years ago called net neutrality. Yes. And the basic idea is if you're an internet provider or an internet player pays, right, for, I guess, this upkeep, right? Are we now going to start preferencing the people that are paying the most?
Well, if you have the ANC lead that, they'll tell you, no, distribution doesn't work that way. But that's ESCOM.
But also in the US, that's become a very political point. Lena Khan, every time you get a new chair of the SCC, I forget which one it is, they flip from whether it's Title 2 or Title I. The US is crazy.
Yeah.
I want to quickly look at tech stocks in China. You and I have had this conversation to say China is exceptionally undervalued. It is outperforming its US counterparts. Everything does sit on that side, but you cannot ignore the regulatory or the political interference by the Chinese Communist Party, and that is dampering that sector more than anything else could drive it negatively. It's the fear of involvement, the fear of meddling. If I'm going to go put my money into Alibaba and then Alibaba is going to get fined and they're not going to be able to meet their KPIs or their targets or whatever. What's the state of China at the moment?
The state of China is, well, it's the ultimate game of, I'm trying to think, I think blackjack is a good one, right? Because you sort of have to guess what the next card is going to be, or else you strike out. And that has seemed to be the game that's being played in China, right? You almost have to be reading into tea leaves, right? Literally, I remember earlier in this year, there was sort of an innocuous line or paragraph that was taken down from one of the Chinese regulation websites, right? Literally a paragraph taken out on a page, and that sent Tencent share prices up because you've got a government that is not telling you what's happening, but you've got people that are just sitting and waiting for any type of sign, any type of movement, and it was around gaming. and the type of restrictions that they were putting
On
on
revenue.
gaming and revenue and in-game purchases and all of that stuff. So they had taken out a line, and that line would have preferenced the gaming companies. Tencent being the biggest gaming company in the world,
But at
and it sent share price
Yeah,
up.
but at the same time, as you say that, I think about the time where it sent the share price in the opposite direction,
Yes.
when they imposed
Yes.
that restriction in the first place to
Yes.
say, we're going to put a cap on how much
But
you
I
can make in revenue. And the Tencent share price, I think, in that day was 10% down.
If you listen to what Xi Jinping said after he won his new term in October, and he talked around, because common prosperity was at the heart of much of this, right? And the whole gaming and education crackdown and all of that. And he basically implied, he said that a lot of, that it's largely done. And in other words, maybe there's some fiddling on the side. To your point, subsequent to that, we did see something get put up and then disappear off a website in China. But at the end of the day, you can buy Amazon at a 41 PE forward, 9.5 price to book, or Alibaba at an 18 forward PE and a 1.4 price to book. I mean, I know that there's risk, but are you not being compensated for that risk?
That's why markets exist, right? That's why they price the way they do, is there's always going to be different levels of risk and there's always going to be different levels of compensation. And I hate saying
Sorry, my
this.
bad. Forward PE of 9.5 on
Even
Alibaba.
better. I hate saying this, but we have run out of time for this segment. I wish we had more time, but we're definitely going to have Mudiwa back in the future. Thanks for joining us, Rob. Thanks for coming through. That's all we have time for. Investor Insights time. We try to find little nuggets of knowledge, little nuggets of opportunity that might be beneficial, but also things you need to be aware of. What do we have, Nicolette?
All right, I want to start off with synthetic identity fraud. I find, in actual fact, I was reading a document from LexisNexis, and they're speaking about how a lot of identity fraud these days is actually done through the synthetic approach, right? And it accounts for 80% of the current identity fraud. But I guess a lot of people don't really know what synthetic identity fraud is, or synthetic identity fraud. And I think it's that thing of throwing away documents in your bin. It's that thing of, logging in at public internet cafes, because that always
Public Wi-Fi's as well. So there's an interesting thing where hackers are able to use a device that logs into these public networks. Now, you and I approach a public network as, oh, look, it's free internet. I don't have data.
Yes.
Let me jump on here.
Yes.
But there's an ability to hack those free internets and all of that. And it's always in the public spaces, because you never know how many people are connected to it, who's managing that, who's administrating any of that.
Yeah.
And they can hack into that, and then they can get access to your device from that perspective. So that's one thing. We don't see it as prevalent in South Africa, but it is a very serious thing. But the synthetic identity fraud side of it is effectively from information, right? Information right now, the world we live in, information is currency. So as you said, the things around the papers that I have at home, they've got my physical address on them, they've got my surname on them, they've got all of those things there. And you see companies like banks and stuff saying, start having your statements sent to you via email and all of that. And I think we live with multiple generations. We live with a previous generation, parents, grandparents and stuff that don't trust the internet as much, and they're very cautious.
Yes.
So they keep all of their information this way. But sometimes that information, that generation is also easily targeted because they don't want to come into the digital space, but you have to with bank cards and all of that stuff. So you have to have a digital profile and a digital presence. And the synthetic identity fraud comes from someone assuming your data and taking that data and impersonating you in a way that is basically you. So right down to the fact that someone will take your ID number
and then blend it with other information.
Or they'll take the ID number, they'll blend it, or they don't even need to blend it if they've got all the other info, right? So if your ID number gives them your name, surname, and everything, and they use that data in a digital context to go and apply for a loan, and that loan is pre-approved and all sorts of things like that. I had a conversation with Santam about it this week to say that it's an insurance thing in part, but at the same time, if there's no physical verification in
Yes.
that process,
Yes.
it's very difficult to see who's on the other side of that keyboard.
Yeah, because all the information kind of ticks the boxes.
It does.
Right?
The information checks out. So where the information cross-checks, does the name match the ID number? Yes, it does. Does the name match the address? Yes, it does.
Yeah.
Those tick box exercises happen because someone's effectively stolen your entire identity. In the past, we used to make fun of it saying, oh no, this is what they do with, and then you get married off to someone at Home Affairs or whatever.
Yes.
But it's much bigger than that. People actually lose their lives because now I have to go and prove
That it wasn't
that
me.
wasn't me. And that's police cases and all sorts
And
of
I'm
other
guessing
things.
that's why a lot of KYCs now are requesting you to do like a selfie.
A facial
or
verification.
A facial verification.
Yes, enhanced due diligence and all
Yeah.
of that.
I mean, it's quite important because I think a lot of credit lines also are being opened. And I was reading on this LexisNexis thing, and they speak about how much these people actually take time to nurture the profile for you.
Absolutely.
So it's a synthetic
It's
profile,
work.
and basically they are adding and padding onto it. They're checking your
social
credit,
account,
yeah,
a
your
credit score. Yes.
I'm like, what?
It has to look believable.
Sure. All right. Let's leave that one alone because that's quite scary. Two-part retirement system is coming 1st of September. I'm actually a bit worried because I feel like there is not enough emphasis on the fact that there is going to be a SARS portion that you have to take in mind. So everybody's like talking about this 30,000 maximum that they can withdraw
Yes.
from their savings component, but you're not going to get 30,000 in your bank account.
Do the maths. Let's do basic maths on it, right? 30,000, even if you're being margined at a 33% tax rate, which is kind of the middle of the band,
yes,
right?
yes.
33% tax rate there, you are getting 20,000 net, right? If you're at the 45% tax bracket, that's almost 50%, you're getting a little over 15,000.
yeah.
Right, fine. What are you going to do with that? What are you going to... The thing is, it's a once a year withdrawal.
Yes.
And for you to then withdraw that
Again.
money, you have to build up that
yes, I was
money. It
about to say
doesn't.
yes.
It doesn't replenish itself.
Yes.
And the proportion at which you are replenishing versus what you're withdrawing doesn't make. If you take a 3,000 rand contribution, which is a significant contribution,
Absolutely.
2,000 of that goes somewhere. 1,000 goes into this.
savings component.
12 1,000s over a year is only 12,000 rand. That is still subject to tax.
tax.
So even if you build up the savings pot over a 5-year period and it's not taxed, you only have 60,000 rand.
Sure.
So
It would be very interesting, though, to look at the numbers of what it would look like if you don't withdraw, because that's the other thing, right? Is that you do a calculation of how much you're going to get at retirement. But if you do withdraw, you almost ultimately are changing what those figures are going to look like.
110%. For every, I think that the numbers said that for every, I think it was for every year of contributions, the compounding of the compounding over every 8 years is equivalent to every year. There was numbers. I'll come back to the stats and
Yes,
but the point is, you have to contribute on a consistent basis for it to
Absolutely.
compound.
Absolutely.
The moment you're withdrawing from that, you not only
disturbing
lose the
the
compounding
compound.
effect,
Yes.
you're never going to replenish and get back to that point, because if you've compounded for 25 years, you suddenly withdraw, you've lost that. You don't have another 25 years to get back to that point. You know what I
Yeah.
mean? So personally, and this is probably a very unpopular opinion around this two-pot retirement system, nobody should be withdrawing their money and putting it in a savings pot because it's useless. Not useless to you and I as individuals. That money
Yes.
can help people, but it is more detrimental
To withdraw.
to withdraw money.
Absolutely.
So that's the first unpopular opinion. The second thing is, I think the government made a mistake with this two-pot policy. I think what the government should have done is should have said, okay, instead of saying you can withdraw 30,000 from your retirement, we'll allow you to put in an extra 30,000 into your tax-free savings account, because that you can still access. That still has different kinds of benefits. Now, obviously from a retirement point of view, the whole point of me saving up for all of these 20, 30, 40 years of employment is so that after that, I have money to retire on and to live on.
Absolutely.
And that standard of living is what I'm trying to maintain, right?
Yeah.
Now, if I'm dipping into that, by the time I get to retirement, it's not going to work,
diminished
right?
quality,
So from a retirement perspective, and retirement funds will agree with this, this is not the way to go. The government, from a policy perspective, saying, oh, we're giving you access to your money and all of that, that's the same money that the government is going to want to use from a PIC point of view to put into infrastructure development, to put into ESCOM, to do that, to invest there. So I'm very against people wanting to withdraw from this two-pot system, because there are very limited things that benefit you and I
as the consumer
from that perspective.
All right, I don't want to get you going with the two-part retirement system and how passionate
That's a
you're about.
whole other conversation.
Let's look at our wall in terms of what are we investing in and what we are putting on the wall. I think the first one for me is Growth Point. I mean, their student accommodation REIT has thrived. They're doing quite well. They've raised they've raised a bond of 1 billion, right? 10 billion.
I think it was 10 billion.
Yeah.
I'll pull the numbers for you. In the meantime, let me pull the chart and just give you my thoughts on it. Growth Point for me, I've loved Growth Point since 10 Rand. It's at about 12 Rand 50, 12 Rand 40 at the moment. The stock, 2018, so about 6 years ago, was as high as 30 Rand. They survived a horrific pandemic on the office side. If you remember Growth Point's concentration to the office retailers, it was, or the office spaces in Sandton in particular, it was insane. They've gone green. They've rejigged the business. The property space is now back in favor. Investors are going back into there. For me, Growth Point is a buy.
It's a buy. It's a definite buy. Okay. Let's go to Pepco. We're talking about credit interoperability, investing 3.1 billion in credit book. Is it working? Would you buy it? Is it looking good?
I've loved Pepco for the longest time. A couple of reasons why, and I'm going to pull the stats for you.
Okay.
As I pull the stats, just bear with me. Pepco is one of the businesses that covers the right kind of LSM and covers it across many service points.
That's true.
The majority of the South African population, the Pep brand, the Ackermans brand, they all sit within the Pepco stable. They've now recently launched into sort of the business side of it for smaller businesses and everything through Paxi and the logistics stuff. But they have one of the largest footprints of a retailer in the world. They have more stores and they're opening more stores. I think they've got more than 5,000 stores, if I'm not mistaken. So their footprint is massive. They know how to leverage it. And interestingly enough, this is the stat I wanted to find. I can't find it right now, but I do remember some of the numbers. It was that when we look at the GNU being announced, there was an announcement of GNU, then there was a subsequent flow of funds into South African shares. Now, amongst that, there was a flow of funds in and the flow of funds out. Naspers was one of the most sold shares. The banks were all of the most bought shares. In the billions. And Pepco topped that. Pepco did net inflows north of 3 billion. I will find it because someone has put it up on Twitter. Oh, there it is. I'm looking at it. A good CFA has put it up on Twitter. And the net sales of Naspers shares was 2.1 billion out of Naspers shares, right? Into the banks, all the banks. The biggest bank was First Rand and Bidvest at 1.9 billion. Anglo Gold, net inflows into Anglo, 2.1 billion Rand. Net inflows into Pepco, 3.3 billion.
Okay, it's a definite buy.
There's your answer.
It's a definite buy. Before we wrap it up, can we quickly go to Nike?
Yes, we can. Nike's been going through quite a bit along with Adidas. The Chinese market is a big contention point for both of them. It makes up 15% of either one's revenue. And they are going through legal battles. So Nike's going through a class action suit while Adidas in China is going through a bribery investigation of sorts and all of that. I did an analysis on both as part of the apparel space with Lululemon thrown into there. What I'm loving most about Nike is that they're trading at $90. They're trading at the most affordable level of all three. It's a buy for me.
Yeah, it's a definite buy for you. All right. I think we'll wrap it there for today. Next week, let's look at taking up credit line to invest, to build an investment portfolio. I think that'll be an interesting one because right now we know that the only asset that you can essentially take out a credit line for is property. So could you do it for stock? Is it worth it? How do you do the numbers?
That's going to be a fun conversation. Looking forward to it. Thanks everyone for tuning in. That's unfortunately all we have time for in this session. We will keep going. We'll keep having these conversations. Remember to join our community page on X. Remember to join us on TikTok because we've...
Yes, we're amazing on TikTok.
We've got an amazing producer and editor. We've got good content that's going out on TikTok. We've got a YouTube channel where we put out the full conversations. We put them out as videos, and we've got podcasting so you can listen to the audios of these conversations. Everything on all our socials is just under Insider Exchange. We've kept it simple. Until next time, investing isn't hard. Just try it.